Wednesday. All right. You guys know that we coach mortgage and real estate and small business. And believe it or not, all three of them feed into each other, knowing that mortgage and real estate are the two closest relatives in this. So I'm going to talk a little bit about mortgage today. Genworth just put out their Q1 2017 statistics showing that 38% of people in Q1 used USDA, VA, and FHA to be able to finance houses, which doesn't sound like a big percent, but it's actually up 11%. And what the article was about was that the traditional 20% down is kind of fading away as we get closer to prices rising, as we start getting further away from the last bubble, which means we might be getting a little bit closer to the next bubble, interest rates going up a little bit more, risk being opened up a little bit more, and that really affects the mortgage and the real estate side of it. So I'm going to talk about that a little bit for you. You know, a lot of people are out there, especially in some towns that are huge conventional, and they always talk to their borrowers about putting 20% down, 10% down, so on and so forth. In today's market, especially as rates as they are today, still great on the government loans. You can almost get a government loan sometimes better priced than an 80% conventional. So depending on why they're conventional versus a government loan, you still might want to look at the government part of it. Even with the MI, it's still a better monthly payment in some cases than it is on a conventional loan. So depending on what the requirements are that's putting them into that part of it, we need to get out of our minds that conventional is a standard way of going, because it's proving that it's really not. USDA and VA are huge products. A lot of people don't know enough about USDA. And I'm asking you this, realtors, if you don't know enough about the USDA product, please talk to your mortgage partners. It's an amazing product. There's USDA in San Diego. Oh, okay, you think about San Diego, a huge metropolitan. Yes, there's USDA available in San Diego. It's not just known for like Walla Walla, Washington. There's USDA loans available for inside large metropolitan areas. There's a lot of funding available that you don't know about. So we don't need to just look in the conventional standard engineering towns and be so rigid that everybody does conventional. No, everybody does conventional because they're not educated enough about the other products. Two, what we need to do is make sure that when we are talking to our consumers that there's a big difference between an FHA and a conventional. One, guidelines. So if one's giving them a reason to fit into conventional, understandable. But two, if we're talking about payment, if you're putting 20% down, if they're planning on refinancing in 3 or 4 years, then sometimes it might be better to do less money down and be able to use that for upgrades, for enhancements, for painting, for anything else in the house that would actually increase the value of the house along with the appreciation that would give us a better sellability to the house later on. A lot of times we're doing with first-time home buyers, and we know they're getting into, say, a condo, or they're getting into a townhome or a smaller home, knowing this is a starter home. Do they really need to put 20% down on a starter home, knowing that they might be moving in 3 to 4 years, when then I could actually save money doing one with a little bit less down, saving the money in their pocket? Even if they're paying an extra $50, $60 a month, how long would it take them to meet what that 20% down would be? Would it be better for their family? Would they be able to do more upgrades or more enhancements to the house that would better benefit them? Look, you are the expert. I'm not the expert because I'm not you. You're the one sitting down with your consumer. You're the one talking to your lender. Okay? You need to have the preferred lender be able to work with you. And always say this, how about we get pricing on an FHA and a conventional at the same time? See what the difference between 20% down is going to be versus a 90% or versus a 96.5% FHA, and see what the two differences are. Does the payments make a difference in putting that much down versus not putting it down? We need to be able to be smarter, and we need to be able to have the fiduciary responsibility, which I always say is not just the legal, but also the emotional aspect of representing our clients, which means that we need to be able to give them alternative solutions. We are here to be the solution provider to our clients, and they don't know what they don't know until we let them know what they don't know. Okay? So again, make sure we're talking to our lenders and make sure that we are establishing that relationship and get the two different quotes. See what the difference between the two of them are and find out the why. Remember, the most powerful three-letter word we ever have in the service industry is the why. If we know the why, we can always solve a problem. All right? Have an amazing day, and I'll talk to you next week.